So in this episode, we're going to be talking about the difference between a pre-qualification letter and a pre-approval letter. What's the difference? What's the big deal? And why do I want to ask for a pre-approval letter instead of a pre-qualification letter? We're going to be talking about all that on today's episode of Monday Mortgage Madness. I'm Sean LaRue, Franklin Loan Center. I'm having a great day and I hope you are too. Look forward to helping you with this information. Come check it out. Alright, so what's the difference between a pre-qualification and a pre-approval? You know, rushing into buying a house oftentimes does not work out to your advantage, especially when it comes to getting qualified for a home loan and getting everything in place. As we already mentioned in our other posts, there's a lot of different information and there's reasons to be cautious about your pre-approval, getting under contract and submitting your offers earlier, sooner than later. But make sure that you're prepared. Make sure that you're prepared, that you've done your homework, that you're working with somebody that you can trust. And it's not just about making sure you've got the money for the down payment. It's, do you qualify with your tax returns and your pay stubs and all that kind of stuff. But just because you have a good down payment available for your home doesn't mean that you're totally qualified. There's a lot of different things that we need to consider. One of the big mistakes that buyers fall into is not realizing the difference between a pre-qualification letter and a pre-approval letter. And we're going to simplify that, clarify that, and get you that information. So getting pre-qualified. Getting a pre-qual letter is one of the most common things that your real estate agent is going to ask you for before making an offer. You'll want to make sure that you're with a good company, with a good loan officer, and especially that they have a good reputation, because a lot rides on the seller accepting your offer and the listing agent being comfortable with who you're working with as a lender, if they've had any experience with that particular person or company, and your ability to get approved for the offer so that the sellers take your offer. So let me boil it down. The pre-qualification process is pretty straightforward. Typically what it includes is talking to a loan officer, getting a loan application, and running credit. Typically the pre-qualification will stop right there, and the reason is because the pre-qualification, we're just gathering some information about your situation, reviewing the numbers verbally, and making sure that the numbers are going to work out. So as I've said in some of the other videos, and we'll link those videos up above as well, there are three common things that we need to verify in a pre-qualification: credit, income, and assets. And in a pre-qual, typically all we're doing is getting the loan application and pulling a credit report. What we're not doing in a pre-qual is verifying income with income tax returns or verifying the assets for the down payment with bank statements. A lot of times the pre-qualification process does not require you to submit that information so that the loan officer sees everything that they need to see in order to get you fully approved or pre-approved. So this is what the lender or the bank's gonna do, is take a look at everything in pre-qualifying you. It's a simple step because we're just taking the information verbally. We're getting the loan application depending on how you filled it out, and your entire financial situation will not be completely analyzed or scrutinized in a pre-qualification. So if you go to one of the big online lenders, typically they're going to give you a pre-qual letter without requiring you to verify your income or your assets or your down payment money, and so that's a pre-qual letter. Typically it's a good first step, but it's not what the listing agents are looking for, and it's not what the sellers ultimately want either. The pre-qualification and pre-approvals typically require no upfront costs in order to work with your loan officer. Typically the loan officers get paid at closing, and so typically there's no upfront fee for working with somebody to get pre-qualified or pre-approved. Now, as you can imagine, getting pre-approved does usually take a little bit more time. The reason for that is because it highly depends on your ability to provide us with the documentation we need. And as you know, in the prior few videos, we went over all those different documentation requirements. It's pretty typical across the board. As we'll get into it in the future, we'll go over some other loan programs, some other non-QM programs or portfolio programs that may require less documentation. But again, that documentation, we'll link it up in the video, probably over there, for the required documentation information that you'll need for most, or like 90% of the loans. Most of the Fannie, Freddie loans, all of the VA and FHA loans are pretty typical of needing 2 years tax returns, 2 months of bank statements, the last 30 days of pay stubs, and a copy of a government issued ID. So the next step is all about getting pre-approved. Pre-approval is exactly what we want. It's exactly what we're looking for. So the listing agent, your buyer's agent, and the seller are all going to be looking for the full pre-approval, which we can typically get done in about 24 to 48 hours, depending on how complicated your situation is. Once we have all the documentation required, that I would email you, you send us the information back, I review it, and we take a look at everything that way. Yeah, so the next stage is going to be useful to any potential home buyers. As we'll know by the end of it, how much we'll be able to afford, what kind of payments you'll qualify for, your maximum purchasing power, but also, you know, you really want to put together a budget of where you and your family want to be, and then compare that against the amount that you're pre-approved for. So if you're conservative and you want to keep your bills low, you'll probably qualify for a lot more than maybe you actually want to spend. But also talk about how much you want your monthly payment to be. Where do you want that monthly payment? Where does that fit in your budget? Have you and your partner talked about it? All very important aspects when looking at getting pre-approved. Yeah, so part of the pre-approval process, as already discussed, the pre-qualification and the pre-approval are basically close. The pre-approval, the first half of the pre-approval process is the pre-qualification process, where you're filling out the loan application and running credit, working with your loan officer to talk about any possible prior divorces, alimony, child support, any of your ongoing debts, your sources of income. And then the second part of the pre-approval process is actually getting the documentation in place to your loan officer and reviewed as soon as possible, so that you can put a plan together, look in the range where you're at on the market for the purchasing power that you have, and also make sure that you're getting your budget tight and you're where you need to be, you know, in order to meet your pre-approval, but also your budget. So one of the questions I get asked about the pre-approval all the time is, do we have to start over if we end up waiting or we're looking for a property? The application and the credit report itself are generally, we're generally able to use those for about 90 days. Now, the credit report is typically good for about 90 days. We are doing soft pulls at the end to verify if you've opened up any more lines of credit, if the credit card balances have been updated, if they've gone up, if they've gone down. So we'll want to make sure that as you're going through the process, you know, you're not opening up new credit cards, you're not buying all the furniture at 0% for 2 years. You know, just wait until you have the keys in hand, and then you can take care of all of that stuff after closing, and you'll be in a really good spot that way. So I always say the application's like water. We might need to update a few things, but it's going to ebb and flow with you and your purchasing process when you're ready to go. We might need to update a credit report, we might need to update some bank statements and some pay stubs to bring everything current, but you shouldn't have to refill out the loan application. We can work with you on that. You know, one thing that might trigger a new application is if you're in escrow to purchase a property and we've already disclosed or locked the rates, we'll need to start a new one, but we can help you out with that as well. So we'll keep working with it. We're a team. We'll work on this together. We have a couple of different things here. The type of loan. The type of loan is either going to be a conventional, FHA, VA, jumbo loan, and those can typically Some of them carry mortgage insurance, some of them don't. It depends on the down payment amount. And then, a 30-year term is very common. Other options are 40-year terms, interest-only loans, and variable interest rates as well. But by far, the most common rate right now is a 30-year fixed. The next piece of the puzzle in your pre-approval is the property information. What kind of property are you going to buy? Are you going to buy a condo, a single-family home, a townhouse, a duplex, a triplex, etc. We need to know what kind of property you want to buy, if the property is going to have HOA dues as well, or if you're looking at condos. If you're looking at condos and you're getting an FHA or a VA loan, you'll want to make sure that that condo project also has their VA or FHA condo project approval through HUD as well. The next set of information that we verify is the borrower information. Your social security number, date of birth, your phone number, your name. We get your ID, your current address. We're verifying a rental history for the last 2 years. There's all different kinds of information that we need to verify on you, but then we also verify information on credit, income, assets, the appraised value, the marketability of the property, the condition of the property, and that kind of stuff as well. Of course, I just went over the employment information, where you work, a 2-year work history, verifying that you're getting your W-2s, the taxes are withheld if you're an employee, and getting copies of the pay stubs as well. We're going to verify monthly income as well as the monthly household debt and expenses. Your mortgage payment is made up of a couple of different pieces: principal and interest, insurance, property taxes, mortgage insurance if you're putting down less than 20%, as well as any HOA fees. If your property's in a flood zone, we may need a flood certification or flood insurance to verify that as well. So that's what makes up PITI, which is principal, interest, taxes, and insurance. And then we'll throw on HOAs as well as part of your housing debt. Okay? So you'll want to make sure all that information is verified with the exact amount of the property taxes and the HOAs to make sure we're calculating all the liabilities correctly as well. We'll also want to make sure, as I said earlier, that we're taking care of any child support or alimony or any other additional debts as well that may not be showing on the credit report. A solar lease, if you have a lease on the house, and if it's a solar panels that you're paying a lease on, we'll need to include that as well. So if you're buying a property that has a solar lease, we'll need to include that into your debt to income ratios as well, like an HOA fee, to make sure that you can qualify for all those payments. The solar lease panels are, when they're affixed to the property, they become real property. So it is going to be included in the monthly payment. We have to be mindful of that because if we don't include it in the monthly payment, there's a chance that you could find the perfect house but may not be able to qualify for it if that lease payment has not been calculated into the deal with your ratios. Assets and liabilities, this is the next one. Again, we're going to verify the last 2 months of your bank statements and verify any and all large deposits in and out of each account. And then we're going to verify all the liabilities off the credit cards. Again, any alimony or child support debt, as well as solar lease payments, as I just mentioned. Details of transactions. There's a number of different questions that the loan application requests that you answer, including, have you filed bankruptcy in the last 7 years? Have you had a deed in lieu of foreclosure or a foreclosure, or, a number of different things? Are you party to a lawsuit? Do you plan on living in the property as your primary residence? Have you owned any property in the last 3 years? Etc., etc. There are going to be all different kinds of questions you need to answer them truthfully. We'll figure out what we can do with each situation and each loan program. As I'll discuss, in some other videos, each loan program is going to have different waiting requirements or seasoning requirements for bankruptcies, short sales, foreclosures, deed in lieu of foreclosures, or whatever might be coming up or had come up in your past regarding your credit. So give me a call, let me know what questions you have specifically about your situation, because each loan situation is custom tailored to you as the buyer, as well as you as the buyer and the property. So what do we get from all this, guys? Well, I think you can see there's a big difference between a pre-qualification and a pre-approval. I think you all understand a lot better that what we're going for is the pre-approval. Let's get your information verified as soon as possible. You know, and if you're an employee and you're a first-time home buyer, and if you're getting pay stubs, you know, it might be easier for you to qualify if you don't own any other property, if you don't have rentals or other businesses. There's just a lot less documentation that you need to provide. But if you have multiple rentals, multiple businesses, you know, depending on the timing, there might be a lot more paperwork you need to provide in order to get pre-approved. So the more detailed your situation is, the more paperwork you're going to need to provide. Don't worry about it. Just provide it. We'll get through it. Yeah, I know it's a lot of information, but you can provide it. We can get to the bottom of it. I can work with your CPAs, and we can work together as a team to get this information nailed down as soon as possible. Once you get your full pre-approval, I'll send you a pre-approval letter for the amount that you qualify for. A lot of times I like to custom tailor the letters to your offer so that we're not showing the listing agents all your cards for the amount that you're pre-approved for. But we'll work on that, get you guys the information, get those offers submitted, and get it going as soon as possible. So once you get the pre-approval letter, what do you want to make sure when you're submitting your offer? Let's say it's been a little bit of time, nothing's really changed with your employment or your assets or anything like that. But if it's been a little while, always check back in with your loan officer, have them update the credit report real quick, get an updated letter. We want to make sure those letters are dated in a timely manner, that the interest rates are still valid depending on what's going on with the market, as well as making sure that the loan officer is aware if you're making an offer on a property with HOA fees or not, that's counted and included in the pre-approval when you're getting ready to make an offer. So work as a team with your agent and your lender. We're here to support you, make you look good, and have everything go as smooth as possible. So get it done early, and remember, stay positive and stay hungry. I'm here for you. So that's it for this episode of Monday Mortgage Madness. Thank you so much for joining me. If you like the comment, or if you like the content, please feel free to comment below. I love hearing from you guys. If you think there's a good point, maybe I missed it, leave a comment, like, subscribe, share, check out some of my other channels. I look forward to connecting with you guys